Today's video is on how to find a market bottom. So we've had a pullback in the market the last few days, especially yesterday. It was a terrible day. Well, statistically speaking, the worst since December. We were up 30% to start the year. Now we're only up about 19.9%, so 20%, and the S&P is only up 4%. So we're beating the markets. That's good. And yesterday we lost about $10,000, which was still in line with the market, but we want to make sure if this is the beginning of more down days to come or if this is the bottom to buy. So let's check it out. SPY. These are the first things you look for. Is the SPY at support? So it's had a pullback. And let's see what kind of support it's at. It is at the orange line, which is the 200-day moving average. This is very significant. All right, so there's only one more layer of support under that, which is the blue line. It looks like 100-day moving average. So if this 200-day moving average doesn't hold and we break below it, and then the 100-day moving average below that, which is just a millimeter below, doesn't hold, we should be making new lows. However, I don't think we would go below 380 because that's where strong support was here, 380 in the beginning of 2023. So we're at support. That's a positive sign. We got a MACD cross here. That's a negative sign as well. But it's already crossed and had quite a move, so it could be ready to cross back up. That happens. And then the RSI, it's not oversold yet. It needs to reach 40. The relative strength index, in order for you to get a good buy signal, 40 or below. And here we reached 40. Here we reached 40 and below. And so usually the 40s correspond with market bottoms. So you really want to see an RSI at 40. You want to see a MACD cross, and you want to see support pegged. And so like here in October, you had the 9-day and 20-day support, plus you had structural support of here in October. You had just before October and right after October, you had support forming. The moving averages were not close by. They were spread out and fanned out like a waterfall, but you still had structural support, and you had this big move up all the way up to the 200-day moving average, which allowed it to form this new consolidative pattern of a low at 223. So these are looking kind of constructive. I would say it's a mixed bag. You have the 200-day moving average that's constructive, but you have the MACD crossing, and you have the RSI not quite oversold, but it's getting there. So if you can just wait for one more down day, perhaps, maybe a push down to this 100-day moving average or slightly below, and then we hold the moving averages, that's what I would look for in a bottom. And then the next thing you go and look for, besides the RSI and the MACD and the moving averages for support, the next thing you look at is the VIX. Is the VIX at 40? So you want to always, the expression is, when the VIX is high, time to buy. When the VIX is low, time to go. The VIX is still low. Theoretically, it's time to go. But in many bull markets in the past, you've seen the VIX remain at this level, which is in the 20s. See, in 2016, it remained at these levels. 2014 to 2018, it remained at these levels. So you don't necessarily have to see a spike in the VIX for it to be a market bottom, but you want to see a move into the 30s or the 40s traditionally before you buy. So just remember the VIX, and we're at resistance here on the VIX. We gapped up to the 200-day moving average, which is actually pretty bearish for the VIX. It means the VIX should be falling soon, and it looks like we could remain in that lower end of the range as a result, which it did in the past bull market. So you want to see the VIX at 35 or 40, but if it doesn't get there on extreme panic and fear in the market on a drop, you can also see it remain in this range. And the fact that it popped up to its 200-day moving average is somewhat constructive for us, because that means that it could have its own resistance and trade back to its lower end of the range, which it did in past bull markets. So we have the VIX is a mixed bag, but we want to see it at 35 or 40 for a true market bottom. We have the S&P chart at the 200-day moving average, which is a mixed bag because it's bullish that it's on the 200, but the MACD is crossed to the downside, and the RSI is not quite oversold enough. And today you can see we're bouncing because one of the Fed members, Bullard, spoke, and he said that interest rates won't need to go up as much as feared. So that made the market bounce some, but you're seeing here we're only up $300. That's not a strong sign of a market bottom. When you lose so much money the day before and then you're only up $300 the next day, it's not a great sign. You want to see strong reversals to know it's a market bottom. So this is not a reversal of any kind. However, we are at 0.5%, which isn't much at all. But look at the market up top. Dow at 0.15, NASDAQ 0.25, and S&P at 0.6. So we're still in line with the indices. And our performance values you saw at the beginning of the day, we were up 19.9%, 98%. At the end of the day, this will change because we're up slightly today. So now we're seeing a little bit more gains, $1,600. So we could have what's not a strong reversal day today or a gap up rally today, but we could have just a stealth rally that creeps up generally throughout the day. And that's what this whole bull market's been in 2023, is kind of a stealth rally. But the next thing I wanted to talk about was our plan of action. And when we do find a bottom, what are we going to add to? One of my favorite plays right now is USA, because our cost basis, we're only at 1% in, so it's not too far above our cost basis. We only have $12,000 in it, and it has a current 10% dividend. As you can see here, we did a video recently on USA, so check that out. Grow your income 10% a year with USA Liberty All-Star Funds. Check that out. Check out these other videos if you like. We're going to add to USA because like I just said, it's not too far above our cost basis. It's one of our favorite plays. Go look at it. Go see that video. Look at what it did versus the S&P over the last 10 years. It beat the S&P. So we're going to buy 1,000. Also, the dividend date's coming up soon. It just had its dividend in the beginning of the year, so it pays quarterly. So now the next quarter is coming up. So you want to check out USA and its sister fund, ASG. Okay, you see that we're up 2,000 now. So again, we're creeping higher. I don't want anything to get away from me. So we added 500 to USA. Not much. We always add in increments each day. You never know what you're going to get in the market. You never put all your chips down at one time. Every day you take it a day at a time, see what the market gives you. So we're scrolling down. Is there anything here that the market's giving us? Not really. Everything's pretty much flat. We're at 214.5 in debt. And we'll call it 210 because 5K is short, like we said yesterday in our prior video. So we added to Highbull. It's up strong a little bit. It's up stronger than most today. We added to Highbull yesterday. We added to USA yesterday. We also added to SJT. We did a video on that yesterday. Pays 20% dividends. Check that out. But we only have small amounts in these stocks, so we're not worried about those fluctuations. We're just playing the dividend gains. We're not timing the bottom on those. Is there anything else for me to buy today besides USA? I was looking into its sister fund, ASG, which is another Liberty All-Star fund, but it's more growth-oriented. So it's up 1.34%. It only has a 9% quarterly dividend, though. We have a lot of tech exposure already. So we just added to USA, which has a little bit higher dividend. The USA shows below 10.37, so it's higher than ASG's, and we don't want too much tech exposure or growth exposure because when the market falls, those fall the hardest, and that messes with your performance. So, but I do want to check out one more tech fund that I had on my buy list as the market falls. So 9.53 monthly dividend. So it's higher than ASG. It pays monthly. And this is a good fund. It's BlackRock, which is one of the best companies out there. So we'll go ahead and add 500 to this one. The MACD crossed a while back. It looks like it wants to cross to the other direction. The RSI is getting there. It seems like one more pullback and wash out to $30 because that's where the low was in October, 30, December-ish, 30. So 30 would be the place, but it's only $1.50 away from 30, 31.5. It's only $1.50. So we'll go ahead and add the $500 now to it to make our debt an even $215. So $500, we never increase our risk too much because we nibble away at things. We'll make it an even 500. So buy BlackRock place. So we've done our buying for the day. We've nibbled, but we haven't bought hand over fist yet because we're still waiting for those signs in the market for a bottom. Yes, we're up 2,700 today. We're at 0.46. Is that in line with the market? Yes, it is in line with the market. In fact, we're beating the market. So this is what you want to see. Our available withdrawal was at 130 a week ago, and now it's down to 116. So you want to keep that number comfortably above 100, your available withdrawal. That's your equity number to watch, not your market value, 383 up here. You want to watch your available withdrawal because we're using margin here, 566,000 margin. And with this 215,000 in debt, we have to make sure we don't get charged too much in interest on this, which is 5%. So we want to keep it as low as possible. And we don't want to buy too many growth funds or oil and gas funds or anything else that's volatile for that matter, because that affects this available withdrawal number. It affects your performances in the market, which we want to stay pegged to the indexes. That's how we constantly beat the market. But then you want to keep this available withdrawal number comfortably above 100. For me, 100,000. For you, it doesn't matter what it is. Just keep it comfortably above zero, because when it's at zero, you're at a margin call. So we're just slowly adding risk each day, slowly nibbling and nibbling, mitigating our risk along the way. You never put it all down at one time until the signs of a market bottom are apparent, and they're not quite there yet, but we're getting close. Watch the VIX, watch the RSI and the SPY, watch the MACD, and then you'll know when the market bottom has truly been put in. And also look for a strong bounce, and that will show you conviction behind those technicals in the SPY, the technicals of the RSI, MACD, and the VIX. So when you keep in mind those signs of a bottom plus a strong move in the market like we're getting today. Now we're up 27. Let's refresh it one more time, see where we're at. 26. So we're kind of flatlining here at this level. Let's see if it can push above it today. Remember those signs of a bottom. Nibble on quality through the weakness. No matter how bad it seems out there, keep buying on the dips and increase your income. That way you pay your dividends down, your debt down, and you're on track to become financially free. Once your debt is paid off, you're just going to be living off pure dividends after. The 97,000 that we earn here, 97.6, it keeps creeping up if you watch all of our videos, because every day we add slightly, we add just a little bit each day. So that 97 will cut the 200 grand debt here in half by the end of the year, and then this 383 will grow 100 grand to 483. So that's the game that we're playing. We're not playing market gains and losses. We're playing just the cash flow game and the margin pay down game. And once that margin's paid down, we're going to be financially free truly in life to buy whatever we want. Then we could buy the Ferraris and things like that. We could afford a Ferrari now, but we're waiting till we're safely out of the woods, until the market truly bottoms and until we truly pay down a portion of this debt before we just go spending like crazy in life, which you never want to do anyways. Always stay disciplined. Anyway, so those are the signs of a market bottom. Stay tuned for more. Thanks.